Good conference so far, right? It's been like stuffed with all sorts of subjects, crypto, neobanks, PSD2. It's very good. Well, it's my pleasure to bring you the afternoon panel on the future of cross-border money transfer and the challenge of digitalization. This is one of the most dynamic precincts in the entire fintech story. This is about remittances. This is about sending money digitally all around the world on a consumer level. It's migrants, it's families, it's households, and it's massive. It's $650 billion every year. That's the remittance business. And it's also very complex and nuanced with all sorts of new technologies flying around, but it's also rooted in ancient ways and means of moving money around. And it's my absolute pleasure and honor to have two of the leaders in this space with us this afternoon to kind of walk us through this amazing story. Ismail Ahmed is the CEO and founder of WorldRemit, which is based in London and operates in 150 countries now, and has done so in what, just the last 6-7 years now? Yes. And Manghat is the CEO of UAE Exchange, which is an older company, 37 years, and does billions of dollars in transfers, especially in the corridor between the UAE and India, where it does about $7 billion. So it's my honor to have you both here. I'd like to start with just a little history, if we could, just given how ancient this business truly is. And Ismail, you grew up in Somaliland and had you were exposed to remittances through your family and your household from a very young age. Share with us, if you could, your story on just how remittances played a role in the development of your family, your community.
Thank you. I think the Somaliland is a good example of the evolution of remittances back in the 70s and 80s, when a lot of migrants from the region went to the Gulf. They tried to send back home, and in those days, the only means of sending money back was through traders who used to collect cash from the migrants in UAE, Saudi Arabia, and use those funds to buy usually construction material, import the goods back into the country. And then that was when my brother-in-law used to work in the Gulf. So we used to receive remittances sometimes after 3 months, because you have to wait until the trader sells the goods. So that was really and it was the origin of what we call Hawala networks, which were trade-based kind of remittances. And that was quite common in Africa, Asia, particularly, I think in Africa. Egypt, Sudan, Somaliland was part of Somalia at the time. In Asia, Pakistan, Bangladesh, and India, because we're talking about the pre-IMF World Bank economic reform is when these countries had exchange rate controls. So if you send money through the government-owned banks, you would normally get in some countries like only 1/10 of the amount. So,
no one wanted to use that.
Yeah, but when my brother used to send like $1,000, it used to take up to 3 months, but we used to get the $1,000. So that was the origin. And fast forward today, Somaliland has got one of the most successful mobile money services according to the GSMA. So it's the closest to a cashless economy now, and 100% of our transactions in Somaliland are now digital, both on send and receive side. So you can see the jump from trade-based remittances to something which is digital on both sides now.
Excellent. I think it's been about 11 years now since the M-Pesa story rolled out in Kenya, and the advent of mobile money became a very powerful story in this space. And it crosses over into areas of financial inclusion and socioeconomic development. And it's just fascinating to see how a model went into those areas. But I think there's very little understanding of what happens in the last mile, and how does the money get from London eventually to a rural place in either Kenya or India or so forth. And perhaps you could just explain to us how that happens and as the CEO of your company, how you manage that.
I think when people talk about money transfer, the larger attention goes down is to the first mile. That is where the customer acquisition happens. You talk about digital, physical, the interplay between digital and physical. But we have two important elements there. One is the middle or settlement layer. And the third one, as you rightly said, Ed, is the last mile. Very interesting. For example, as an organization of 37 years, operating in 45 markets, handling $30 billion, specifically markets like India, where we handle $7 billion. The last mile has changed a lot, but still has a huge potential, and it is quite really not discovered the digital disruption on the last mile. For instance, specifically, if you want to take India as a market, as an example, somewhere in 2008, for the amount of volume that we used to handle that time, we were handling like $3.5, $4 billion that point of time. 60% of that was disbursed in cash. It was only 40% was non-cash. When it's non-cash, it is largely bank accounts. It goes to do that. But fast forward into 2017, we handle $7 billion now. Of that, roughly 90% is non-cash. It has become electronic. And the huge opportunity that really throwed that from 40% in 2008 in almost 10 years, coming to 90% has been the power of APIs. I think API has really opened that messaging to be real-time online, because people always go and resort to cash was because of the speed and because of the availability at any point of time. And cash comes with a cost attached to that. Because if you do electronically, there is a discovery of cost of transfer using electronic is definitely lower than that to do that. Also, markets like Africa, where we work with M-Pesa quite a lot, or markets like Pakistan or Bangladesh for that matter, the way telcos has really powered that last mile has really changed the increase in the volume, because a lot of discovery of remittances, which was going informally, as Ismail mentioned about, to the formal means has been a biggest revelation. The cost of remitting money has reduced. For example, if the World Bank, one of the initiatives World Bank drives is to reduce the cost of remittances. So there is a moving target on that. For example, from Gulf to markets like Gulf to UAE to India, or UAE to Pakistan, the cost of remitting money is less than 3%, which is very nominal compared to the world average. So last mile powers the financial inclusion. Last mile reduces the cost of remittances, and API has really thrown humongous opportunity of bringing people to the financial fold.
So Ismail, APIs sound, I mean, wouldn't blockchain be a more preferable technology to use, given the innovations around it and so forth? Would that be preferable to APIs? Help us understand that.
Well, I think, when we talk about remittance, there are two parts to how we operate. There's the messaging, which is instant. If you're doing an API,
So that happens now already,
that
instantly?
happens instantly. So,
okay.
I mean, there's no faster means of sending money to the partners. We're connected through an API. So the messaging is fast. Blockchain would not add any value to that, because that is already happening.
Okay.
I think perhaps where blockchain has a role is the settlement. Settlement is still broken. So, UA Exchange, which is our partner, by the way, also we work with the UA Exchange, and other partners, we're connected through APIs, so the messaging is working. Actually, it's the settlement of funds where we still rely on the banking to, say, pre-fund M-Pesa in Kenya, MTN, Yes Bank in India. So we're still using the banking.
Because the settlement takes a long time.
And the settlement, which is the one which takes 2 days, maybe 3 days sometimes, and we're settling largely in USD.
And your customer doesn't want to wait 2 or 3 days.
So a lot of the money we raise, or the facilities we have, are about financing the time it takes for us to collect the money from the customer, to ensuring that we have pre-funding or credit facilities with our partners. So speeding up, and that there are costs associated with that, because we take exchange rate risk, because when we process cards, we either get it if we're lucky next day or second day or sometimes a couple of days later if there is a weekend, there's a bank holiday. And then we're already pre-funding and ensuring customers get their money instantly because so that is where that is where it's still broken because we're relying on the existing banking backend.
I see. The banks, you have a very interesting relationship with the banks, right? Because you need banking partners, especially on the receive side of this equation. But at the same time, you're operating in many developing economies where there are many households that are unbanked. There are many households who have difficult relationships with banks. They might not trust the banks. So it almost sounds like there's kind of a paradox in your business model. On the one hand, you need the banks, but on the other, if I use your product, I might not need the banks. Is that right?
Yeah, I think this is not an either-or play. This is a collaborative play. I think that's where if you go back to the beginning of the millennium of 2000, the biggest buzz was mobile money transfer. And mobile money transfer had a lot of expectations and had a lot of ingredients which could potentially solve the problems that we see able to do that. And mobile money transfer did not really live up to the expectation and did not solve the real problem, except in some of the markets, like in Africa, some parts of Africa, or some few parts in Asia. The biggest impediment in that was the lack of collaboration, and there was no ecosystem really getting built up. Because if you look at it now, the world, the digital, which has become very secular, and that is the truth which has really brought it up to do that you have to be very collaborative, you have to be a part of the ecosystem. So it's true that in some places on the send side, players like us or players like Ismail's WorldRemit compete with the banks, but on the distribution side, you end up partnering with them because they give you the power of distribution. So is the case with telcos, but so is the case on the non-banking. For example, wallets has been a really growing trend, whether it is in India, whether it is in Africa, whether it is in some parts of Pakistan and Bangladesh, or other parts of Asia. So the wallets is really growing as a very powerful distribution method.
But in some markets, do the banks see you as a threat, either of your companies?
Of course, it is, definitely, because you
Do
try
they fight
to do the share. You try to do the share. For example, now I can definitely know that in GCC, banks were never looking at the money transfer as an opportunity for growth. Changing in the economic situations, banks are increasingly looking towards this opportunity where they could do. But again, there is no one or two tick boxes that you could do and get it right. Right? It's definitely the complexity on the processing, the complexity on the last mile, the complexity on the first mile. For example, on the digital, if you look at it, you should have powerful UI, UX, you should have powerful settlement modes, you should have a very good distribution networks to do that, and you should try to finance the inefficiencies while Ismail is talking about it. So there is a lot of components of secret sauce that you need to get it there. But definitely it is competition in one place, but you collaborate in other places.
I think where banks are worried in the last mile. Historically, they controlled the last mile. And if you look at particular markets like in Africa, Western Union had exclusive relationships with most of the big banks.
Right.
And we're talking about banks which historically used to be owned by the governments, which were liberalized, but only liberalized in name when it comes to remittances, who then became exclusive partners of Western Union. Those are losing market share now to mobile money networks, either retail networks that are also getting into remittances. So there are a lot of interesting things happening in the receive side. And that's why in East Africa you had a lot of banks which initially fought hard to prevent M-Pesa, MTN mobile money.
Are they still fighting?
I think to some extent I would say they may have succeeded in Francophone Africa where the mobile money has been successful, but the banks are still fighting back. So West Africa, or Francophone Africa is somewhat behind, say, East Africa, where I think regulators have supported the pro-consumer, the financial inclusion solution launched by the telco server.
Right.
So that is still ongoing.
I mean, I've always found that a fascinating part of your business is that as for all of the digitalization that's occurring, the speed, the innovation that you're kind of bringing to these models, so much of it is still predicated on good old-fashioned deal-making. And I mean, you're on the road a lot, aren't you, Ishmael? And talking to banks and potential partners and doing deals. I mean, that hasn't changed for decades.
It's true, and I think and it will continue, I mean, until we get to a situation where a lot of APIs enable us to connect to a hub today. Often in most of our receive markets, we often talk to individual partners. So a typical large receive market for us, we would have one telco, a couple of big banks, other licensed retail networks. So that means multiplied by the number of markets we're present, and then you can see the size of the network we need to do. Historically, if you look at the traditional money transfer business like Western Union, MoneyGram, banks often use their platforms to pay out cash. Today, it's all about API, so it's a lot more involved building an API with a financial service institution in the receive side.
I think it has changed, to that extent. For example, now, say a market like India or market like Philippines or Pakistan or Bangladesh. I can tell example that in India, somewhere in 2009, we used to work with 30 different banks to distribute the payments. Now, with the NPCI, which is Payment Corporation of India, under UPI, you need to literally work with 2 or 3 banks. You don't have to go and work with all the banks because the interoperability between the banks through the switching of the payments has tremendously improved. So is the case that you see in markets like Pakistan, but India has really gone far ahead on that. Even in Bangladesh, through a model called PFF18, where you are able to switch payments between the banks. So too, you are seeing in markets like Indonesia through a switch called ATM Bersama, or so it is happening, you see, in Philippines. So increasingly, people are trying to leverage the infrastructure, not to try to redo, which everyone is trying to do. There are efficient ways of doing the middle layer. That's, again, the point we talked about in the beginning, to make sure that you don't try to replicate and add on cost. At the end of the day, the consumer has to pay, and there is no proposition in the long term. So people are really piggybacking on the infrastructure, focusing on interoperability, and APIing is definitely changing that world. So you don't have to go talk to multiple banks. Few banks, few telcos even. For example, now in UPI in India, you can even switch wallet payments. You could switch the telco payments all into one go.
So this should be able to help you to accelerate your partnerships, to accelerate your business. Looking ahead, one of the most fascinating aspects of where your business is going is the integration of money transfer into messaging systems. And we look at what's happening with WhatsApp, Facebook Messenger, et cetera. And that, of course, raises the whole platform question for your models. Share with us, if you could, what is that going to look like? How is that going to change your businesses?
I think that's the future. I think, if you look at it now, people now talk about incumbent versus fintechs, right? I think the future is all about the new economy, right? When I say new economy, the new economy of Amazons in the e-commerce, or Googles, or the WhatsApps, the Facebooks. Payment or remittances will largely get hidden. For example, now when you hail an Uber taxi, you don't think about how do you make the payment. Payment is embedded.
Will these platforms want to do the money transfer piece themselves, or will they?
No, that's the proposition. That's the value. That's the value is that you have got 3 components of complexities of technicality, complexities of regulatory, and complexities of operational matters. So you can't change those complexities. Now, the platform play comes is that who can offer that platform which can handle these complexities and bring, because customers don't want to know the kind of complexity. The value is that how can you hide that complexities and make it relevant, and that's where specialists like us really comes into play.
Okay, and how important are the corridors to this equation?
So I think first, going back to this question,
Yeah.
I think we're going to see convergence of messaging and cross-border transfers. Because the instant communication is already changing the behavior of consumers, remittance behavior of consumers. So we're seeing migrants who are sending money much more frequently now because they are talking to friends, family members back home, sometimes
So
virtually every day.
the instant communication is affecting the frequency that they're sending.
Yeah, and that's what we see on our platform. When we launched, the customers were sending one transaction a month, and now we see 3.5 to 4 transactions a month. In the next 4 or 5 years, I would be surprised if you don't see as many as 10 transactions a month, because while someone is on a messaging, say WhatsApp, Filipino nurse here talking to her mother back home, many of those conversations end up with sharing a small amount of money. So it is really changing. And many of the migrants are now sending money which they would not have done in the past when they used to go to offline locations because of the transaction costs, the time involved in doing that. So I think digitization is, we're talking about the future. I think the future is increasingly becoming digital, particularly on the receive side now with mobile money and so on. And where that takes us to is probably, 30, 40 years ago, the future was kind of trade-based remittances. So we might be getting back to the future now, because if funds become digital and we're struggling with the settlement, I think the future is more likely to be some sort of a netting. We still send a lot of money to East Africa, but a bigger volume from East Africa goes to Asia, trading to China, and other places. So could we, I think we're going to see probably, remittance going back to how it was, where possibly through a blockchain, where we do some sort of a netting rather than rather than what we do, so that we can address the challenges involved in settlements.
So blockchain would have the potential to replicate the Hawala experience that you had, only it would happen in milliseconds or seconds rather than rather than days or weeks. But one takeaway point that I'd love to leave the audience with is this idea that the technology has really changed your business, in that in a conversation, an IM conversation, I can just decide right then, you know what, let me send you 100 pounds. And boom, that can happen. That's what truly will be a game changer. It doesn't cost that much extra just to act impulsively like that.
Yeah, not even 100. I've been sending money back since I went to the UK in 1988, and the way I behave is like other customers, other migrants. I send funds which I was not intending to send, because as I chat with friends and family members back home, some of those discussions lead to me sharing sometimes small amount while I am on WhatsApp, a few tabs, and I send 2, 3, even sometimes $5. So that's what increasingly kind of a wealth sharing, which in many Africa, Asia, traditions, you have a wealth sharing where if people live in the same area they used to do, but with the distance it was difficult. But I think technology now has removed that distance.
And one another pattern that we see is that people used to send early remittance as a plain vanilla. Like you send remittances, you're not participating in the last mile. You don't know how does a remittance send is being used. Now, what we see is a new pattern called as purpose-based remittances, where you send money to pay your bills, you send money to top up your phone, you send money to buy a wealth instrument, you send money to pay your insurance bills. So that is what the hidden part that we're talking about it. So it's not that you are remitting money, you are making a bill pay, or you are paying your insurance, or investing on an SIP, a systematic investment plan, but it is being powered by remittances.
I see.
So that's another pattern that you try to see.
That's really, now you're talking about just changes in behavior and so forth. Well, I told you this is a really dynamic part of the whole fintech story, the remittance space, and I just want to thank both of you so much for taking the time to kind of walk us through that.
Thank you so much.
Will you please thank our guests?